Hi, this is Adam Hewson. I'm coming to you from the digital studios of Market Club, and the market we're looking at and observing and analyzing today is crude oil. That's right. If you drive a car in America, you know how expensive it is to fill it up, and this is partly the reason crude oil prices have moved up quite dramatically in the last year or so. And are they going to make new highs? Are they going to trade over $100, which was the last high we saw in crude right here? Are we going to go higher? Well, the trend is clearly up here. We've had this sort of stagnation here, but today we received a major buy signal on our system. I'm going to show you how that works. I'm going to show you step by step each trade, how it worked out, and how you could have made money using the Market Club approach. And that's our trade triangle technology. Again, you may have seen these videos before, but I think you'll be impressed with this video and how you can benefit using our trade triangles. So stay tuned. Okay, we're back, and what we're looking at is the crude oil prices from the beginning of this year. So right around here. I'm going to show you each trade and how we did. We came into the year actually long. So on the 2nd of January, which is right here, we got long crude oil. We exited this position right here on the 7th, and we had a loss in that position of approximately 70 cents, which is about $700. Not great, but I want to show you all the trades. As I said, we also then got short at 92, which was right around these levels here. Okay, we didn't get short here, but we were out of the market, avoided this downturn, but we got short on our weekly charts, and that's how we do things. And the market moved down nicely. We covered this position here, and we had a profit of 255 points, which is $2,550 a contract. So we took this position. We stayed with the market, out of the market because we wanted to be short this market. The market rallied. It did not change trends at our work. We reinstated our short position on the 1st of February at 89.60. The market moves down. We cover our position 88.95. And that produced another profit of approximately 65 points. So how do we do all of this? Why do we move in and out of those markets? Well, quite honestly, it's very simple, and I'll show you how to do this. So I'm going to take everything off the screen. I'm going to go to our weekly chart. So take a look at our weekly chart right here. I'm going to scope this in a little bit. You'll see some of the moves before, but I'll scope this in further so we can clearly see how we did what we did in the marketplace. Well, first of all, we said we came in long the market because we wanted to be long. So the 2nd of January, we purchased and went long crude oil. This is March crude oil. We then had a signal on 115 to get short crude oil at 92, which we did. Now, the weekly trends, this is a weekly chart right here, are meant to tell you which way the market's headed, whether it's going down like this, or up like this, or what we think is going to happen is up like this. We just had our buy signal, as I said, at 92.35, that this market's headed higher. Now, this possibly could push it up to $100. It could push it up to $120. At this point in time, no one knows for sure, but you're trading with the major trend, and that's what's important. These are used for the trend, the major trend as we see it, and our dailies are used for timing purposes. So as we had the signal right here, at 92.35, that was our time to get long this market based on this signal. Now we'll use the daily charts. I'm going to go back to the daily charts. I'll just take this off the screen, and I'll go back to the daily charts. It's very simple to do with Market Club. We just click here and click there and say Get Data, and we're back to the daily charts. Now, as you can see on the daily charts, we covered our short position but did not go long because we did not have the signal in place. Now the signal is in place, which was, as I said, the signal to buy this market was 92.35, which is right here. This is the buy point, and it's proven to be a very good buy point so far. But you're seeing this live. You're seeing the actual date that signal occurred, so you'll be able to follow the next few days or few weeks and see exactly how it works out. But I'm going to show you, this is no fluke. I want you to take a look at our Q4 results for crude oil. I also want you to take a look at our Q3 results for crude oil and look at the other results we've had for the other markets. This is the only way, in my opinion, to approach the market to be successful in the long term. It's a systematic, automatic way of getting in and getting out of the market. Hey, this is Adam Hewison for Market Club. I'm going to show you some other results at the end of this video of just how much money you could have made using our trade triangle technology. So stay tuned. Okay, so let's take a look and see how we did in trading the March crude oil through 211.08. Well, our first position, we came in long on January 2nd. We purchased this at 97.85. We were out for a loss of 70 points. Our next trade, we had a weekly trend change, so we got started trading the market from the short side, and this was the way to trade. We had two successful trades. First one was for 255 points, and the second one was for 65 points. Then we had another weekly trend change. Remember, we used the weekly for our trends and the daily for our timing. So we got long crude oil at 92.35 and 211, which is today when we're recording this. And so far we have an open gain of 165 points. I think it could go higher than where we are right now. So to recap, we had 4 trades, 3 winners. We had a 75% success rate, gains of 485 points, and losses of 70 points. This produced a net gain of 415 points, which in dollar terms is $4,150 per contract. Very happy with that. So I recommend you take a look at our Q4 results for crude oil as well as our Q3 results. I think you'll be impressed. So the next page will show you just what I'm talking about, so stay tuned.